Okay, what if I told you the ultimate cheat code to wealth right now isn't some slick Wall Street broker? It's a chatbot. Seriously. Imagine opening up your investment account and seeing that an AI just straight up outperformed thousands of seasoned finance professionals. Millions of people are already handing their financial futures over to tools like ChatGPT. So we have to ask, is this a brilliant revolution in how we build wealth, or is it a complete financial disaster just waiting to happen?
Welcome to this explainer of the source material. Today, we are breaking down a genuinely fascinating, high-stakes experiment. We're looking at exactly what happens when you give a chatbot complete, unquestioned control over a virtual investment portfolio. We're talking no human opinions, just pure artificial intelligence navigating the absolute chaos of the stock market. So let's dive right in and see if the hype is actually real.
To figure out if trusting an AI with your hard-earned money is the future or just a massive mistake, we're looking at a pretty rigorous test. A completely AI-generated portfolio was locked in for exactly 30 days. No safety nets whatsoever. Every single move, every little fluctuation, and every market reaction was tracked for a whole month to see if this bot could survive the gauntlet.
Section 1. The AI Investing Experiment.
Look, we all know AI is incredible at, writing essays or building code. But the stock market, that is a completely different beast. It's driven by human emotion, breaking news, real-world consequences. So, to make sure this trial was perfectly fair, there were 5 super strict rules. Rule 1, ChatGPT had to build the portfolio entirely on its own. Rule 2, absolutely zero changing the portfolio based on human opinions. If the AI picked it, it stayed. Period. 3, the portfolio had to hold multiple companies, so no betting the entire house on one lucky stock. 4, every major market event during the month had to be recorded. And finally, Rule 5, at the end of the 30 days, we compare the AI's performance directly against the overall stock market. No excuses, no cherry-picking the data.
Section 2. ChatGPT picks a portfolio.
So how do you even kick off an experiment like this? Well, with one incredibly simple prompt. Build a balanced stock portfolio for the next 30 days and explain why. Now, you might expect it to chase wild internet hype or maybe gamble on meme stocks, but it didn't. Within seconds, ChatGPT recommended a highly diversified portfolio of massive, incredibly stable tech companies. We're talking Microsoft, Nvidia, Amazon, Alphabet, and Meta. And it actually gave really solid reasons. It pointed to strong balance sheets, revenue growth, profit margins, and their massive competitive advantages in things like cloud computing.
Now, at first glance, this AI portfolio sounded incredibly intelligent, right? But as any investor will tell you, sounding smart and actually making money are two very different things. The stock market doesn't just reward good logic, it heavily rewards correct timing. I mean, even the greatest companies on earth can plummet in value if investors suddenly panic. So the ultimate question was this: could this perfectly logical, entirely AI-generated portfolio actually survive the month?
Section 3. Surviving market volatility. The clock starts, the money was invested, the portfolio was locked, and the waiting began. Day 1, pretty calm. But by day 3, reality hit, and it hit hard. Breaking financial news completely shook the market. Suddenly, headlines were everywhere screaming about inflation, rising interest rates, slowing economic growth. And guess what happened? The exact tech stocks ChatGPT had recommended began falling really fast. The entire portfolio essentially just turned bright red instantly.
And this right here brilliantly illustrates the ultimate clash between man and machine. Because think about it, when beginner investors see their portfolio turn red, they feel fear, they panic. They often sell their stocks just to stop the bleeding, which really just locks in their losses. But ChatGPT, it doesn't feel fear. It doesn't wake up in a cold sweat because the stock dropped 5%. It isn't doom-scrolling financial Twitter at 2 a.m. It literally just sticks to the plan without a single ounce of emotion.
This is a massive point. Financial studies actually show that a lot of investors earn lower returns than the very funds they invest in. Why? Simply because they react to the news. They buy after prices have already shot up, and they sell in a total panic after they fall. The market rewards patience, not perfection. And it turns out, AI's absolute greatest superpower might not be perfectly predicting the future at all. It might just be its total, unwavering discipline.
Section 4. The final 30-day results.
All right, as we entered week 2, the portfolio stopped moving as just one big block. The winners and the losers started to separate. One of the AI's picks started surging on some positive news, while another one struggled and drifted lower. But the AI held firm through all of it, setting the stage for the real moment of truth, testing the chatbot against the ultimate professional benchmark, the S&P 500. Let's be real, if the chatbot couldn't beat a basic index fund, there would be zero reason to trust it with your cash.
So, drum roll please, what happened? It was an incredibly close neck-and-neck race. I mean, depending on the exact day, ChatGPT would pull slightly ahead, and then the market would push right back in front. Ultimately, the AI didn't magically crush the market. But it definitely didn't embarrass itself either. It competed incredibly well, matching the broader market almost perfectly.
Honestly, the biggest surprise of this entire 30-day experiment wasn't even the final percentage return. It was how fundamentally sound ChatGPT's strategy actually was. It emphasized diversification, it focused on risk management, and it used long-term thinking. Ironically, those are the exact same core principles that experienced professional human investors rely on every single day.
Section 5. How to actually use AI. Okay, so where does that actually leave us? The really crucial point here is this. We need to stop asking if AI can just magically make us rich by tomorrow and start understanding what it's genuinely good at. AI cannot predict unexpected inflation or geopolitical conflicts or natural disasters. It absolutely cannot guarantee profits, but it is an absolutely elite research assistant. It can instantly organize massive amounts of complex data, compare business financials, highlight potential risks, and most importantly, it removes human greed and panic from the equation entirely.
There's this brilliant quote from the source material that just perfectly nails it. It says, "Think of ChatGPT like a GPS. It can suggest the best route, but you're still the one driving the car." I love that. You wouldn't just close your eyes and let your GPS steer your car into oncoming traffic, right? In the exact same way, you should use AI to navigate the super complex world of finance to plot a really smart course, but you absolutely must never surrender your own critical judgment.
The real winner of this 30-day experiment is just a really powerful realization. The future of investing isn't humans versus AI. It's not a competition. The future is humans using AI. The absolute greatest advantage out there right now belongs to the investors who learn how to combine incredible technological research tools with their own human critical thinking to finally defeat fear and overconfidence.
So ChatGPT proved it has the discipline to match the S&P 500 over a pretty turbulent 30 days. But I want to leave you with this final, really provocative thought. If an AI can hold its own against a standard index fund for a month, what happens when we raise the stakes? What happens if an AI tries to build a lifelong retirement portfolio to compete against the strategy of the greatest investor in human history, Warren Buffett? Can a machine actually outsmart the Oracle of Omaha? Now that is a fascinating question for next time. Thanks so much for joining me on this explainer of the source material, and keep exploring.